So, British, the first time you were on the show a couple months ago, a lot of people were asking about your personal journey and your background. They wanted to hear about that. Can you give us a quick overview of your background, what you studied, your first steps professionally, and the path that led you to Bitcoin, and basically what your Bitcoin aha moment was? And while you're at it, maybe you don't have to answer this one, but while you're at it, what's it like being a gazillionaire?
Well, I'll answer the last one. I'm not a gazillionaire, so there's that. I have no idea how that feels. As far as my background goes, I started working, when I was 16. I always came from a family. My parents are immigrants to the United Kingdom. Came from a family that was focused on, trying to get ahead, basically. And my dad at that time was in real estate. And I saw him negotiating a property deal. And one day, instead of sort of just leaving him to it, I stood there and listened. And I was a little bit overconfident, which I know anyone that knows me would say that doesn't sound anything like me. But I was a little bit overconfident, and I was standing there listening to this property deal happen on the phone. And he hung up, and I was just sort of smirking at him. And he was like, "What are you smiling at?" And said, "That shit looks easy." Um, and probably one of the best gifts I ever got was he didn't tell me to get lost. He basically said, "Well, if it looks easy, then you need to show me that it looks easy." And so that was my first kind of my mouth wrote a check that I had to now cash, basically, right? So that was kind of my journey. I had to learn about what mortgages were. I had to learn about what real estate was, how real estate is built, why real estate is built, who buys real estate, why they buy real estate, how to sell real estate, all of this stuff at like 16 years old. I had to learn that. And I did. And my world has always been in investments, understanding kind of why do property prices go up? Right. That was kind of the first question I had in my mind. Like, why the hell does this go up? Like, it doesn't make any sense because you can just build as much as you want, right? And then I moved into equities and whatever. And really, 2008, which was my first recession, and hopefully no one will ever kind of experience what that was like, because anyone that was there in 2008 understands that it literally felt like from one day to the next that all credit just stopped moving. And it was terrifying. So when people are talking about recessions nowadays, it is it's quite cute, because 2008 was a real recession. What we see nowadays is nothing. That my world's always been in investments since then. I was always fascinated about understanding why assets go up, what makes assets move, and then I always thought Bitcoin was a scam. And in 2020, um, I was basically got a call from a friend who I really respected, and he said he was moving some assets into Bitcoin after being on group chats with all of us, sort of cussing Bitcoin out with all of us. And as I proceeded to cuss him out, he said, "We're not having this conversation until you read the Bitcoin Standard." And then I had nothing to do. I respected him, so I listened to the Bitcoin Standard, and the penny dropped for me in that process.
Wonderful. That's a great line too. I need to maybe start using that one myself instead of getting into the whole back and forth with, people who have just turned on CNBC or something like that. Before we get to that, if you guys watching at home are excited to have British HODL back on the show, please hit that subscribe button on YouTube. We're gunning for 10,000 subscribers this year. We're 25% of the way there, and we truly appreciate each and every one of you. You talked about, the early days in real estate, how that sort of shaped you. Can you just highlight maybe what were some of the biggest lessons there that you learned for both business, life, entrepreneurship?
Oh, yeah, those are really wide topics. I would say, when it comes to business, everything's a deal, right? Everything in life really is a deal, and it's, are you able to present a deal to someone in a way that they want it, and that determines everything, right? It's that's really the acquisition of all desires in life is, can I make it attractive to, for lack of a better word, the universe, in order for it to want this. And that's when it comes to business, that's that. But the big lesson that I learned in 2008 was that assets really don't matter. It's all about liquidity, right? And because it was like, well, from one day everyone's telling me all these properties are in massive demand and everyone wants this because they want to own property. And then the next day, all the demand for property went away, and the only thing that changed was the credit went away. So clearly, I kind of started developing my thinking in 2008, which was it was never about the property; it was about the credit, right? It's like even though the property was, like the vehicle for the credit, the demand for the property was non-existent as soon as the availability or the demand for the credit went away. Or the supply of the credit went away. So that kind of taught me, like that started my journey into understanding, like, okay, how do these markets actually work? And then, it still took me 12 years to figure out what I know now, which is, well, rather not what I know now, but how I execute now. It took me 12 years to kind of figure all of that out. So yeah, it's been a long journey. I'm lucky I started very early. That's the one advantage that I have on a lot of people my age.
Gotcha. And a lot of people today, particularly young people, are facing a lot of economic and job uncertainty, and basically just trying to figure out their own careers and to gain their own financial freedom. If you were starting over from zero today, no British HODL background, what would be your next 3 to 5 moves?
It's tough, man. It's tough right now in the world that we're in. Like yesterday I was watching a video of a guy who's basically figured out how to use Claude as an AI agent and a coding tool, and can basically run an instruction and have Claude rip apart any VC funded business, rebuild it, and basically have it up for sale at a quarter of the price at which that VC funded business is running at. So it's like, wow, now if that can happen from anywhere in the world, right? Because it's no longer, you don't have to be in the US anymore to do this. So now any VC funded tech startup is now on notice, basically, right? It's quite scary when you think about it. What would I do? I would figure out that a career is no longer a thing, and you need to figure out you need to learn the skills to be able to adapt. At the same time, I would also understand how the world works and the fact that it all works on credit, and then just figure out how to pivot from one thing to the next as quick as possible. And really, the skill that I think is now more important than ever that I had to learn was the process of the learning process that comes with adaptation, and being able to, like, I'm not a tech person, right? Like I know I like technology, I like using technology, but I'm not a tech person. I kind of figure I need to learn how to vibe code now. I guess that's a skill that I need to spend a few hours or hours, a week on to understand what this new world is. And then I'm sure in 3 to 5 years, I won't even need to vibe code. Maybe I'll need to think code, right? Because we're all going to have chips in our brains to be able to execute things on thought. So yeah, it's a changing world. I would say that the next 3 to 5 kind of steps would be, okay, everything's dependent on the credit. Where's the credit moving? The credit's moving into AI, Bitcoin. So clearly, what are the disruption opportunities I need? Figure out how to be more valuable to someone that's already paying for something, and go figure out how to do that and get in front of them.
Yeah. But what if the window isn't that deep, right? That 3 to 5 years, and you just have to adapt so much quicker. How do you solve for the risk of, kind of chasing the new hot thing, vibe coding, whatever it is this month or that month, and then, the pendulum swings the other way?
Well, that's the adaptable part, right? You need to be adaptable. Right now, it looks like that's the window, so you need to operate under those terms. I really think people are going to struggle if they think that they're going to end up with a 10-year career anymore. Right now the average S&P 500 company is 15 years. So it's like, you better figure out that your goal is very simple. It is make money and put it into assets. And that's everyone's goal. That's the game that's being played. Make money, put it into assets. So figure out how to make money and put it into assets. There's so many opportunities. The good thing about volatility, which is the world that we're in now, it's a highly volatile world, is that when there is volatility, there's a lot of opportunities to extract cash from the volatility. So, and that doesn't mean trading, right? It could mean anything, right? There's places in the world that need things, figure out how to get them there quicker and cheaper than anyone else, and suddenly you have a profit margin. So, that game is going to stay the same. You just have to, I think, you just have to get better at it and faster at it and think quicker. That's going to be the challenge for a lot of older people, I think, in this changing world. Young people are at a huge advantage because their brains are already fried anyway, so they need a newer and bigger dopamine hit. So might as well figure out how to make that dopamine hit, make you some money.
Sounds great. Sounds great. All right, first, let's move over to Bitcoin here. That's probably why a lot of people came to the show. Curious to hear your updated views. We're obviously in 2026 now. For viewers who don't know, want to talk about the debasement trade here, which just involves moving cash into hard assets like gold and Bitcoin to essentially protect against government-induced inflation, which essentially devalues currencies, fiat currencies. In 2025, we saw gold, silver, other precious metals essentially just continue to run up nonstop. But Bitcoin actually ended the year slightly negative, despite the debasement trade going on. British, if people are chasing more purchasing power, especially with U.S. government debt hitting 38 trillion and increasing by about 1 trillion every 75 days, why do you think Bitcoin was largely left out of the action last year?
Well, because one of the things Raoul Powell has really done a lot of great work on this and simplifying it down for people to really understand. And the reality is that liquidity has not been flowing in the markets for the last 2.5, 3 years. There's been no real liquidity. Now, people will say, well, if there's been no real liquidity, why is the S&P 500 and gold running? Well, it's like you can't confuse a concentration trade to liquidity flowing in the markets, right? Like these are not, you should not confuse these two. Last year, there were basically two trades. It was an AI trade and it was a gold, silver, and metals trade. And they've done really well. And gold, silver, and metals is an interesting one because typically when you look at it, gold and silver sniff out incoming liquidity. They don't kind of rally when the liquidity is happening as much as they do try and sniff out incoming liquidity. So they're going to go first, and they've done that pretty well. And it kind of makes me more and more bullish, especially with the changes that are coming to markets and to liquidity starting Jan 1st, really.
Do you think last year, going into 2025, there was any way to sort of know, maybe for the average person, that Bitcoin, or not Bitcoin, but gold, silver, were going to have the kind of run that they had?
I think it was difficult last year. You know, Basically the thing was this: everyone was waiting for liquidity, and liquidity never came. And then, of course, things were delayed by like 3 months because you had this in the middle weird government shutdown situation. So liquidity was also paused because of that. So it was just tough. Like it was a weird set of events. We also had, um, President Trump sort of causing volatility in the markets when it came to tariffs. One day the tariffs on, one day the tariffs off. That's great as a negotiating tool, right, to create uncertainty, but it's not great from a market's confidence perspective. And of course, again, I'll give him massive credit. Raul has simplified all of this down to one indicator, and that's the PMI, which is the business cycle, the confidence cycle. And if the confidence cycle is not ticking up, your risk assets are not moving. And so, that's what we're dealing with right now. And I think this is about to turn in Q1 of this year. So I think we're going to have a very, very, very bullish 2026 if the business cycle runs and the liquidity comes in, et cetera, et cetera. A lot of ifs, right? Of course, that's what markets are based on. But until then, you sit on it. And as far as gold goes, gold had a really good run. Silver had a really good run end of the year, and I had all my previous gold and silver friends calling me up and saying, "Oh my God, don't you wish you were in gold?" And I said, "Yeah, so wish I had not sold all my gold in 2020 and put it into Bitcoin at $5,000 a coin. Like it's stupid, right? They have their once a decade kind of move, and I think that's what we got here.
Okay. So you wouldn't make the case that after seeing a run like that, that maybe it's worthwhile to have some more diversification. I know there's people who are, the Bitcoin advocates, but then, they also own gold, and they diversify into different assets in case we have a situation like we did last year. But it sounds like that's not the view that you would take. You're still, you know, Bitcoin's going to win in the end over a long enough time span, 5, 10 years, even longer. Um, Holding Bitcoin only will win out.
Yeah, but look, but that's because of my risk profile, right? I'm in a completely different scenario to many people. So you got to assess what your risk profile is, and then make an investment decision from there. For me, you say the same thing that I told my gold friends in 2020 when I told them I'm selling all of my gold and silver and putting it into Bitcoin, which is, if you can tell me exactly how many ounces of gold or silver came out of the ground yesterday, I'll move 50% of my net worth back into gold and silver. There's no way to tell. And I like absolute scarcity, and Bitcoin offers absolute scarcity, which is why, when I sold my gold in the 2000s and put it into Bitcoin at 5,000, it's 20x. Whereas gold went up 50% after a decade. That's they kind of have the same thesis, which is why I don't mind it. Like, if some people want to put some into gold, that's not a problem for me. But for me and my investment thesis, my risk parameters, and my way of thinking, I want to be heavily exposed to Bitcoin.
Gotcha. Well, British, take us back to October 10th, 2025. Where were you, and what was running through your mind in the days before Bitcoin? It started to surge. It hit a new all-time high, and it looked like it could at least have a run like it did in 2017 and 2021 to end the fourth quarter. Take us back to that experience for you. I'm curious, what was going through your mind? Where were you? What were you thinking?
I don't actually know where I was. I can't remember. I think I was here in Dubai at that time, and you just see this market running, and I'm like, okay, that's kind of interesting. It's kind of fitting into this narrative that has been built up around the 4-year cycle, where you buy Bitcoin, or you sell Bitcoin basically 18 months after the halving, and you buy it 6 months before the halving. And it's like, this is kind of convenient. This is interesting. It's kind of convenient. And then obviously the market meltdown happened. Um, and that was that. And that kind of fed a lot of the narrative, right? A lot of the 4-year cycle narrative, because literally, coincidence or not, and this is the thing, I don't really believe in coincidences. So when this thing happened, it was like, yeah, this kind of looks like, someone's trying to take advantage of this narrative as well, which is, you know 4-year cycle ends in October, big boom, 126 is the top, retail morons are going to sell. And guess what they did? They proceeded to sell. So, and we can see that, right? The big accounts were not selling. You had OGs that have been selling for a long time, but really big new holders weren't selling. It was the under 100 Bitcoin addresses that were dumping their Bitcoin into this, and it's like, well, or even less than that, actually. The under tens were selling it the most. So it's like, well, it's pretty easy to manipulate the peasants.
Can we go into conspiratorial land a little bit there? Like, what do you think happened? I mean, there, like, it was triggered by a real event, right? The president tweeted, he threatened to increase tariffs on China by 100% or something like that, and it almost seemed like you said, it's hard to believe it's just a coincidence, right? It almost lined up too perfectly with the energy and the vibe of everything going up, and everyone thinking that we're going to have this 4-year cycle, and then whack, boom. Um, what do you think happened there?
There's two sides to it. Look, the benefit of being a long-term holder is that none of this matters, right? Like, it's just, okay, we're now going down. We'll see how long this takes. But apparently, what happened was an exchange that had, a US dollar, quote unquote, stable coin broke its peg, apparently on Binance, and that caused a bunch of cascading liquidations. But it's kind of weird that it all kind of happened around the same time, right? Like this is again like you add conspiracy on top of conspiracy on top of conspiracy. And you're like, yeah, I don't know here. So, you know, if I was put it like this, let me be absolutely frank, right? If I was a big
Please.
player, if I was a big player and I had the opportunity to move the market like that with no consequences, I'd do it. I'd take the Bitcoin. I'd absolutely take the Bitcoin. This is the fucking jungle, right? So it's like if you're sitting there going, I'm going to trade against, the best players in the market that kind of have, a, a way to do this with no rules, none of the same kind of, well, not most of the, without most of the rules that are in equities, they're going to take advantage of it. They understand the game better than you. They have more liquidity than you. They understand how you think better than you do. They understand how to manipulate you. They understand everything. It's like the MSTR, MSCI situation that happened, right? Like MSTR started going down. Everyone's shorting it. It's having the brunt of all of the downside volatility on Bitcoin. And then suddenly the MSCI news comes out, and I was like, this looks like short covering liquidity to me. And of course, MSTR started to kind of slow down its decline at that point. So yeah, markets are going to play games. That's why I like to just hodl and place my bets and wait for indicators that I kind of see in the market as reliable, kind of like sentiment changes. I like confidence changes. I like liquidity changes. I don't really pay attention to what the average person is doing.
Gotcha. And do you think that event is fully behind us at this point, the October 10th one, or does the market still need more time to sort of work through the massive liquidation and deleveraging?
Well, big buyers started coming back in. Large, whales started buying Bitcoin at a pace that they haven't done for a while. And today we're seeing a breakout on Bitcoin as well. So it kind of looks like it's behind us. We'll certainly see whether that's true or not. But it does kind of look like that event is now been flushed out.
Okay. And British, I know one of your favorite topics is around BlackRock and Uncle Larry. You've talked about how powerful it was when Larry Fink and BlackRock got massively involved in Bitcoin. That's one of the reasons you essentially knew the game had changed with their ETF announcement in 2024. I'm curious about your thoughts on JP Morgan, though. Jamie Dimon went from, disparaging Bitcoin for years now, and now JP Morgan has filed with the SEC to launch their own leveraged structured note tied to the performance of BlackRock's Bitcoin ETF. And it essentially, I think, will offer the potential for 1.5x gains on Bitcoin or on the IBIT ETF. So JP Morgan, they're waking up to Bitcoin now.
That's done, right? Like that was done at like the 80-ish thousand level. So, they again, like how do you know how do all these products and things start coming out right at, the bottom? Maybe it's a coincidence.
Well, what do you think the significance of this is, in your opinion, and what role do you think that JP Morgan will play in the years ahead?
Yeah, it's massive. I think, all the banks were inevitably coming. One of the things I said in 2023, 2024, 2025 is that the role of these bankers is to create markets. JP Morgan has said, Jamie Dimon rather has said that if his clients, want to trade shit, he'll make them a market for shit. Like that's what their job is, to create markets. And so if you have one bank on the long side, the natural position to take until it's time is I'm going to take the short side, because you get to create a market for people. So that's what I think has happened here. I think JP Morgan, this is all incredibly bullish. And in fact, today we're recording this on the 5th, and Bank of America has just gone official with its 4% allocation, right? 4% allocation on kind of like the day that Bitcoin technically breaks out here. It becomes all kind of interesting, and I think JP Morgan being in the game is huge. I think it's a really, I think JP Morgan is full of extremely smart people, but the person that changed this game is Larry Fink and Robert Mitchnick and everyone at BlackRock.
Yeah, well, yeah, I love thinking about these and talking about these different events because you look back in the past and you're like, okay, like you said with BlackRock getting into Bitcoin, their ETF, like it's a it's a good signal. If there's going to be a good time to buy, right? Like that's a good opportunity. A lot of what people may have thought was risky at the time, like a lot of that had been de-risked just by that event. Here with JP Morgan and some of these banks coming out with either new products or recommendations that they're making to clients. Like you said, interesting that it happened near this local low after this blow off top that we saw in October. And I'm curious, maybe if we look back a year, 2 years from now, will it be super obvious that okay, yeah, that was an excellent time to make an entry point.
100%. I mean, think about it. You had the worst liquidation in Bitcoin and crypto's history, right? And that includes FTX and all the bullshit that happened there. And Bitcoin went down 36%. This is this is a cakewalk for Bitcoin, right? This is we should all be sitting here very proud of Bitcoin for this drawdown, and then tools in the market that were available to receive the brunt of the short side is also a good thing because that's how it's going to reduce the volatility on the underlying asset if MSTR, if Bitcoin Treasury companies, et cetera, can basically higher volatility options to Bitcoin can take the brunt of the short pressure. So now you've got even more stability on the Bitcoin side, and more opportunity around it and more volatility around it. So this is it's extremely bullish for me. The fact that we went from 15,500 to 126,000 in an environment where there's no liquidity flowing is quite bullish. And I think a lot of people that are bearish, thinking about the 4-year cycle, um, are proving themselves quite moronic here.
Well, I'm glad you bring up MSTR. I actually did want to go there. They're obviously the most important operating company in Bitcoin right now. They've established a cash reserve, which you went on a fabulous monologue about in one of your recent YouTube videos. So, with Saylor finally deciding to hold a stash of these melting ice cubes, do you think MSTR is now effectively bulletproof, knowing they could raise capital in the future in sort of this repeated fashion to service their debt and dividend payments if needed?
Yeah, it kind of feels like he can't. No matter how much he ATMs the stock, he just can't get it below a 1 MNAV, which is quite bullish too, right? I think. Look, I think that one of the things that we don't think about is the fact that this is the first time anyone has ever done this, right? This is not like this has happened before. I can't remember any gold treasury companies that were doing this. This is the very first time this type of financial engineering on an asset, on a scarce asset, let alone a digital scarce asset, has ever been done. So Team MSTR and Michael Saylor are learning, and they're learning fast, and they're adapting, and this is all really good. And so they figured out, okay, cool. There's a lot of FUD and probably a lot of questions from S&P and other debt holders and preferred holders that were saying, what happens if you can't service these dividend payments on these preferred products? They said, all right, watch this. Now we have 24 months of of dividend payments in cash, and you can only do that when you've got 673,000 Bitcoin on the balance sheet. Um, and I think they're playing the game at the highest level here. It's the only and the most relevant treasury company in my eyes.
Yeah, and I think you had this idea about, you said you'd be okay with them as they go through the ATM using 90% of what they raise to buy Bitcoin and, continue to stash away the other 10% in this cash reserve. And I
100%.
think today with the
Yeah.
announcement, they did
It's
something
kind
very
of what they
similar.
did, right? Yeah, it's
Yeah.
kind of what they did. Surprise, surprise. Yeah, it's if you understand the game, you can kind of see these moves coming, right? So, yeah, I think this is extremely smart. Let's say for every $100 million, they buy $90 million of Bitcoin and put $10 million in cash to pay for any dividends. I'm not mad at that as a shareholder. I think that's quite smart. So, and if that helps them get graded and everything else for the S&P, Now you're looking at more and more capital coming in, and then of course, if it makes the preferreds much more palatable for the banks that need to, allocate capital into them, and more capital comes in, then that's even better.
Yeah, and I love what you said about this being the first time that something like this is done. I remember back in 2020, I told myself, the next time I get an opportunity to make an investment in, a company that's doing something new, that's, experimenting, really innovating, and has, a brilliant leader at the helm, like I'm not going to miss that. And I was essentially referencing, like, okay, like maybe I sold Amazon too early. Why didn't I buy Tesla? I was like, I'm not going to miss that. And I think the other key ingredient too is like something that, just mainstream media and, the consensus is generally like disbelief in whatever they're doing. And I think you have all those ingredients here in MSTR. Obviously it had a crazy run, but it's come back down now. So yeah, could be another great opportunity here.
To me, MSTR is a 10-year hold, right? When I screwed up because so I've been an MSTR holder since the very first day after the very first day of trading after they announced a Bitcoin strategy pivot, right? So that was in 2020. I screwed up because when IBIT came out, I thought, okay, my initial thinking for MSTR was this is an ETF alternative, and it played that role really well until IBIT came out. IBIT came out, I thought, okay, I need to pivot out of MSTR, put it into IBIT because it's now served its purpose. So I took most of my position and pivoted into IBIT. And I was right for probably about 3 weeks, right? And then I was aggressively wrong for 3 months. And I had to figure out what was going on here and what Michael Saylor wanted to build here. And I did, and I pivoted back, but I'm still missing thousands and thousands of shares that I owned before. So it is what it is. You live and you learn.
Right, right. And why do you think they chose to incorporate the cash reserve when they did rather than anytime sooner? Is it just a matter of, okay, they're just learning along the way? Do you think Saylor didn't have this idea already? It's not like that crazy of an idea to establish a cash reserve.
Saylor responds really well to the market, right? He's ducking and weaving with the market, and so you know I, probably because they didn't need them until these preferred products started getting taken seriously, right? He just did a tour of all the big banks that he's been posting and sovereign wealth funds and everything else. How do you know that they didn't demand this, right? They didn't say, right, you don't even have a secure cash fund, so I know that I'm going to get my dividend payments. And then he said, all right, that's not a bad idea. Let's do that. We don't know any of these ongoing thinkings behind the scenes. So he's ducking and weaving with the markets. And again, I've said this many times. Michael Saylor is the fastest thinking person that I've met in real life. I think he's completely capable and able to duck and weave with the markets, and that's what he's doing. I don't even know I can't even imagine what the next pivot's going to be. I'm looking forward to seeing what it is. But these preferred products are massive, and I don't think we've even started scratching the surface of what's possible with them yet. Especially STRC, which has become more and more interesting to me over time. And I'll definitely consider holding STRC at some point for my portfolio. It's not for me right now, but at some point in my portfolio, it may be quite useful.
Which one is that?
STRC stretch.
STRC. Okay, gotcha. I personally don't see risk to this as long as MNAV is above 1. But just to ask a question to hear your opinion on this, for MSTR equity holders, how much risk, if any, do you see from their continuous dilution as they continue to raise capital to ATM for either Bitcoin or the cash reserve?
Well, I'm a common stockholder, right? I'm not a preferred stockholder. I don't hold any preferred stock in MSTR. I like the common stock. So, for me, is there dilution? Yeah. Is there price movement going down? Yeah. But has Bitcoin gone down? Yes. And I try and remind people, like, MSTR. I said this on videos for over a year now. Like, MSTR is building a speculative platform on top of Bitcoin. What that means is you have to be able to speculate on Bitcoin through MSTR. And in order for you to be able to do that, to make it worth anything, it has to be more volatile than Bitcoin, because otherwise you can just do it on Bitcoin now through IBIT, right? So in order to have any value to the market, it actually has to be more volatile than Bitcoin, which is why implied volatility is very important for MSTR. So and also that doesn't just mean to the upside. You actually have to be more volatile to the downside on Bitcoin to maintain value and position as a speculative platform. So what I mean by that is if Bitcoin went down 36% and MSTR went down 36%, I'd rather just buy puts on IBIT now, right? I'd rather just place short positions on IBIT now. I want MSTR to go down 70% when IBIT's down 36% because I can now place leverage short positions to the downside, and MSTR actually has some value from that point of view. So all of this that's happened is good. MSTR moving more. MSTR has to move more than Bitcoin in any direction. That's the key. And if it's not moving there, it will start to lose its speculative platform value, and that's when you'll see, price kind of stick very closely to the value of its Bitcoin. By the way, one of the things that he's already stated, but they haven't done yet, which I'm kind of excited for when the first time they do this, is they could quite easily ATM any of these preferred products and just buy the common stock, right? If the MNAV is below 1, let's say the MNAV goes to 0.9, he's already stated quite clearly that he's willing to, instead of, buying more Bitcoin, you just buy back the stock because that increases Bitcoin per share, right? The goal is Bitcoin per share. And so if he does that, right, firstly, you would have to wait until the MNAV drops below 1, but that now puts kind of like a sailor put on MSTR. And that's also quite exciting. We'll see when it turns out that that's the first time they do that.
Yeah, and like you said, MSTR, it's designed to be a levered play on Bitcoin and has historically tracked at about 1.5x in both directions. After everything we've seen and experienced over the last year and changed on this Bitcoin and MSTR roller coaster, has your thinking changed on whether you'd sell any MSTR after a new all-time high to either move that capital into Bitcoin or create your own cash reserve to, buy back the MSTR shares or even Bitcoin at a later time, eventually when prices mean revert?
The thing is that I can do that because I live in Dubai and there's no capital gains tax, right? So I could happily do that. But what's the point? What are you going to do, right? Like, so actually, this is an interesting scenario of using like stretch, for example. If you think that MSTR has topped, let's say you're a wizard and you know that MSTR has topped and Bitcoin has topped and it's now going to go down for 2.5 years. You could quite easily sell out of your MSTR common stock and just buy STRC. Now you've got your cash sitting at par value and you're getting a 10% a year yield on that cash, and you wait until some kind of bottom until you're comfortable, and you flip back into MSTR. So this is a interesting vehicle to use. I would argue that there's better ways to do it now, right? Buying puts is one way to hedge, right? You can place a short position. That's another way to hedge. There's lots of different things to do. I kind of worry always when it comes to quote unquote taking profits. What if we go through a period where there is this S curve of capital saturation, and so I would have to see a massive parabolic top here in Bitcoin in order to do that, because otherwise it's not really worth the risk. Would I buy puts? Yeah, absolutely. At some point I'll buy puts to hedge my position, but that doesn't involve selling the underlying asset.
What signals would you need, or what would need to be happening in order for you to be like, okay, now's the time to put on a hedge?
There's there's a few things that I look at, but the easiest one, again, it's not my thing. Raul Powell has said this, is looking at the PMI numbers, because it just happens that Bitcoin is perfectly correlated with the business cycle and the confidence numbers. So if you look at that and you buy Bitcoin under a 50 PMI and sell or hedge at above a 60 PMI, you've done pretty well.
Gotcha. Okay, want to shift a little bit to other BTC treasury companies. Do you still hold any of those treasury company stocks? And if so, what role do they currently play in your portfolio?
Yeah, so this was my summer of activity bias getting the better of me with these other treasury companies, and I put a few $1,000s into each one of them and whatever, and it's overall I've probably got half a point, half of 1% of my net worth in other Bitcoin treasury companies, and I fucking hate myself because it takes up so much thinking, yeah, and it's only 0.5%, right? And of course, they're all down. So I decided that I would be pivoting out of all of them. There's sell orders on all of them, and whenever that turns into liquidity, I'll put it back into MSTR and forget about it. My life's quite simple, like it's basically spend forever thinking about what I want to do, and then execute it, and then forget about it, and then occasionally I have these moments of activity bias, and that makes me spend pointless hours trying to figure something out that didn't really need figuring out. And that's what I learned with my experience with treasury companies summer of 2025.
What do you think leads you to do that? What do you think causes those jitters to say, "Hey, I want to, do some activity"? And what do you think you can put in place to, put some guardrails around that?
Greed. That's basically it, right? It's just greed. It's like, okay, cool. Everyone's making money. All my friends are making money. Let me do this. I can figure this out. I'm a genius. It's just greed. That's all it is. And as I was doing this, by the way, I was putting out videos saying this is like, you can just hold the Bitcoin, right? You can, and if you really want risk on top of that, you can just hold MSTR. And I feel sorry for people. Look at the psyops that happened last year, right? Just look at the extent. There were two main psyops, right? Psyop number one
Okay.
was the Bitcoin treasury companies, right? That was a
Mm,
psyop. I
yeah.
know people because they message me on fucking X, and they tell me about how they sold 30, 40, 50% of their Bitcoin position to get into a Bitcoin treasury company at a 7x MNAV, and now that treasury company is 90% down, and then they flipped out of that, and then, of course, the next psyop came along, which is gold and silver. So then they started buying gold and silver at like 4,200 and $70 an ounce, and then they're gonna get screwed on that. So it's like, I don't know. At the end of the day, the simplest thing you want to do. It's why I kind of hesitate to talk about things as well, because it's like, at the end of the day, the simplest trade that you have ever are gonna get is Bitcoin, um, because it's the absorber of all liquidity, right? And all of these companies, if the thinking is right that all these companies want all this Bitcoin, you should just hold the Bitcoin because clearly they want it, right? So it's like, why? So it's just greed that kind of just like generates this desire
To be
to
honest, you don't
to
even need all the
fuck yourself.
companies. Like Saylor told you, he wants all the Bitcoin, and it's not like he's just buying 100 a week or something like that, right? Like he's dead serious. Like that's been demonstrated over 5, 6 years.
The absolute idiot's guide to owning Bitcoin at some percent in your portfolio. President Fink and Michael Saylor. Done. That's it. That's it. What more? If at that point it's no longer, it's like it's no longer smart to hold this asset, right? That's what's crazy. Like Bitcoin has become the stupidest investment that you can make. President Fink and Michael Saylor, and then on top of all of that, the downstream of that is the C-suite of the U.S. government, the C-suite of the entirety of Wall Street, and the C-suite of every government now worldwide. So this is no longer a smart play. Like anyone who buys Bitcoin in 2025 and 2026 was not smart when it gets to $1 million. You were just like not stupid. This is the smart trade is done. The
Maybe that's the
smart
same
part,
thing, though.
it's not.
Maybe
It's
that's the
really
same
not.
thing. Waiting till it's de-risked, right?
No, it's not. It's not. It's really not. That's a way to make people feel good. It's not. You right now, you just have to kind of just not be stupid, right? The smart people were the ones that were going through 20. The last smart kind of cohort was prior to the ETFs. As soon as the ETFs came out, like as soon as the filing went through, that's why my content started then, right? Like it was going on for a few months, but that's when I really put my pedal to the floor because this is it. Like the game is done now, right? Like you got now a few years. The ETF application went in. You have a few years, and then you're just never going to be able to buy any of this at any reasonable price, or never going to be able to buy a high enough quantity of it. So, no, this is like anyone who buys Bitcoin at this point. You got Trump in office, President Trump in office, President Fink in charge of Bitcoin, Michael Saylor buying up as much Bitcoin as possible, and the entirety of Wall Street behind it. You don't have to be a genius to understand this.
I get that Uncle Larry, Michael Saylor, they're here for the long term. They have staying power. But what do you say to people, who would say, okay, well, the C-suite of the U.S. government has, maybe 3 years left. And, they said they were going to come in and do all these miraculous things with Bitcoin. They're supposed to be buying and, they haven't done that. So what would you say to those people?
Well, these people are idiots because these are the same people that tell me the bankers control the politicians and then tell me the politicians are about to leave in 3 years. Well, which one is it? Do the bankers control the politicians, or are the politicians going to leave in 3 years and then the bankers are fucked? Make your mind up, right? I think that everything moves on finance. And regardless of who is president, the moment that BlackRock got into Bitcoin, the game had changed. It doesn't matter who was going to win. And that's my conspiracy theory, right? But that's just the way that I see how the world works. Everything is dependent on the finance, and when it comes to leaders and presidents and stuff like that, they're advised by their financial advisors on what might be the right thing to do. So, make your mind up. Like I don't care who's president of the United States of America. I don't care who's prime minister of the United Kingdom. Bitcoin is winning.
Gotcha. And not to stray too far away from these treasury companies, what do you think went wrong with Naka?
No, the market, right? I think a few things have gone wrong. By the way, they still haven't gone out of business, and also they still hold the Bitcoin, right? They still hold the Bitcoin. So it was they're about as close as out of business as you can get, but they still haven't gone out of business, right? And so, these treasury companies are a speculative investment. And again, like as I was making these investments, I'm telling people that I'm putting like half a point of my net worth into them, right? So it's like worst case scenario, you lose half a point. And it is what it is. But the amount of time,
Just curious why you think it didn't work out, though. Like, why it hasn't been working out?
Yeah, a couple reasons. Number one, I think that Wall Street, from what I understand, I don't think Wall Street liked the PIPE mechanism that has been used to raise money on a few of these companies. I think that there was too many, right? And also, I kind of think like if you think about what I said about MSTR, where it has to be more volatile than Bitcoin, well, these treasury companies kind of have to be more volatile than MSTR. Because if you think about it from a layered perspective, MSTR has to have a higher return than Bitcoin. Well, for me to take even more risk and put my money into Nakamoto, Strive, AWS, whatever, I have to kind of have a higher return than MSTR, because otherwise I can just collapse all my capital into MSTR. So they're kind of doing what they're supposed to do, and they're being stress tested right now. We'll see which ones. I think the ones that survive will actually end up doing quite well. I just don't want to think about it, right? And I'm quite happy with my MSTR return on top of Bitcoin for my portfolio, and I just don't want to spend so much time thinking about 0.5% of my portfolio.
Gotcha. And speaking of some that might survive, I'm curious about your thoughts on Metaplanet and Smarter Web. Specifically, I would say apart from MSTR, those were probably the two that showed the most promise and the most results. Do you think they'll come roaring back when Bitcoin's price and sentiment recover?
I hope so. I really want SWC to win. I think they should be a British company. Just from that perspective, I think they should be a British company, which is a major holder of Bitcoin. So I really want them to do really well. I think they've got what looks like smart people over there, and I hope that that they pull through. It looks like they are, and make it a massive success. Same thing in Japan. I think that these treasury companies are going to have a lot of value for trapped capital that can't invest in either Bitcoin or can't invest in in MSTR. So there is going to be a lot of speculation, a lot of mania around them when Bitcoin is running, and that's a good thing. And really, that's what they are. They are higher return, higher speculative plays on MSTR. And that's how I think looking at them as an alternative to Bitcoin is quite ludicrous, because really what they are is an alternative to MSTR if you can access them. There's a lot of trapped capital in Japan that can't buy MSTR and can't buy Bitcoin. Well, at that point, Metaplanet's your only choice, and I think for that it's a great way to get in. I'm kind of curious to see what happens if and when MSTR lists one of their products, if not the common stock, over in Japan. That'll be quite interesting, because if you were a Japanese investor, do you want to hold an American company with 673,000 Bitcoin behind it, or do you want to hold a Japanese company with 30,000 Bitcoin behind it? I'm yet to see. Or what happens when an ETF launches in Japan, right? So all of these things, MSTR has been tested by fire on, also a bear market, right? A full bear market. So, we'll see. I certainly hope they all win. I support all Bitcoin treasury companies, but like I've said on Twitter, just because I support and want you to win doesn't mean I need to own your sack of shit.
Okay, well, we'll leave it at that. Well, British, it is a new year here. We're in 2026. I want to do a little bit of reflection here. So, looking back on 2025, what were your biggest lessons from the year? What did you get wrong that you're willing to admit? And why do you think you were off track? And then finally, what's the most important thing that you think you got right in 2025?
I would say that the thing I got wrong in 2025 was misjudging when liquidity would start flowing into this market, misjudging how and what tools the US government, the Treasury, the Fed would have to refinance the debt because they're going to refi like $8 to $10 trillion worth of debt. And all of that comes for expiration in the first half of this year, 2026. So I kind of thought, okay, they're going to get these rates down, right? They're going to get these rates down to refi this debt. I had no vision that what they'd actually do is change the leverage ratios and just shove all the debt onto the bank's balance sheets and tell the banks lend it out, right? So it's like I didn't know that was going to happen. I think Treasury Secretary Bessent has done a masterful job there, and the Fed has figured out that that's the way to do it, rather than lowering the rates. And that was announced like tail end of last year. They said, okay, cool. Not only is it done, it's optional January 1st. And then by April, it's mandatory. So every bank will be, they're going to change the risk ratios on all these banks for holding US Treasuries. And by the way, there should be no risk for holding US Treasuries because US government can just print it, right? So it makes sense what they're kind of doing. And then, of course, you've got all these rate cuts that are coming in. And so cascading that, I thought that the rates would have to come down a lot sooner than they did. Now you realize rates don't actually have to come down, right? Because you can just shove those treasuries onto the balance sheets and change the risk ratios, which makes it not really a drag on a bank balance sheet to carry any of this. And then as the rates do come down very, very slowly, those banks can now lend out that extra room that they have on their balance sheet and do credit expansion straight to the real economy. So you have Wall Street taken care of, Main Street taken care of. Interest rates can come down very slowly over a period of time while you can do all of this tariff stuff that you're doing to restructure how trade works for the USA. And that was complete. I didn't know that, right? I didn't see that. I didn't know that. I didn't think how that would happen. But that's what's happened. So, I think mistakenly, again, one of my lessons to learn over again is it's all about liquidity, right? And measuring that and watching that is the most important thing. And it is what it is. As far as what I think was absolutely right about It's what I've been doing since I started making content, which is your time to own one Bitcoin is ran out or running out at a very, very fast pace. I think that the 126 to 80 was a very kind of, lucky moment for a lot of people that have had the opportunity to, been smart enough to go in. And of course, most people wouldn't have, because they said, oh man, I wish I could buy it at 85, and then it's down to 80. And they're saying, fuck that. I don't want to own any of this now. I'll buy it at 55. So, and I think they're going to get screwed. So it just, I think I've been really right about that. Like the time that people have to actually acquire this asset has been running out for years now. And you can't even say Wall Street is coming anymore. But Bank of fucking America is putting out notices saying you should put 4% of your portfolio into Bitcoin now. This is not a case of, oh, they're coming. Oh, they're evaluating it. Oh, no. They're doing it now. Right. So I think I was extremely right on this. And I was extremely right about the fact of how they would start to take your Bitcoin. They're going to play every single dopamine game in the book. They're going to play every single game that they can to acquire as much Bitcoin as possible and take it from the plebs, which they did do, because I can see it on-chain data, right? So it's happening. When I speak to retail now, they're not interested in Bitcoin. They want to know what the next 1000x coin is. They don't care, right? So there's a very few handful of people who still want to understand this, want to understand what's going on, allocate their, some of their net worth into it. But the reality is most of retail doesn't give a shit. And that's it. It's a very bittersweet moment for Bitcoin and for people in general. They're just going to have to find another way to make this work. So yeah, those are the two things: lessons and
Gotcha.
rights.
Wonderful. And looking ahead, what is someone who's
Oh,
just
another thing I
starting to?
completely got wrong
Sure.
was spending any time focusing on Bitcoin treasury companies.
Mm.
By the way, you asked me earlier what my guardrail is, right, for defending on these activity biases. It's very
I was gonna
simple.
say, just pick up the phone, call me, say, "Hey, I'm a greedaholic," and I'll say, "British, don't buy." Just
Yeah, no.
just close the brokerage
What's
account.
funny about that is I do that with a few people, and I still end up doing it. So what I've realized is that my first, anytime I think about, okay, I kind of want to do an activity bias trade, my first thought is going to be, is there a Patek that I want to buy, right? And if there is a Patek that I feel like buying, that's going to be the first thing. That's going to be the first thing. So that's my guardrail this time. It's way more fun to buy Pateks than Bitcoin treasury companies.
All right, there we go. And looking ahead here, someone's starting to invest in 2026. What do you think they need to understand about both Bitcoin and the shrinking purchasing power of the US dollar?
Yeah, it's interesting. I've been thinking about it, like what message actually works now, because really you're talking to an incredibly stupid person, right? Like that's basically what's going on. So, if you get past saying BlackRock, US government, every government worldwide, C-suite of Wall Street, and the person goes, "No, I don't even want a 5% allocation," you're talking to a fucking thickhead, right? Like this person, like you could bang their head against the wall repeatedly and you got to worry about the dent on the wall rather than their head. So it's like I don't know what to say to that person anymore, right?
British, have you ever thought about comedy? I'm cracking up over here.
I'm just telling the truth. Like this, it's what more can you say at this point, right? Like, okay, so I've had these conversations now. It's like just put 5%, put Bank of America's 4% allocation in. And they're like, no, I don't know. It's kind of spec. I'm like, you're worth, $30 million. Like 4% is not going to make any impact to what you're talking. It's like, okay, well, I'm just going to bang your head against the wall because this wall clearly needs a hole in it. Like that's what's going on here. We're talking to incredibly stupid people. We're talking to gamblers. You're talking to people that really don't want to understand anything. They want to take risk and they want to speculate and they want to do things that come with high risk. And Bitcoin is not that anymore. Bitcoin is a de-risked asset, and it will become more and more de-risked. All of Bitcoin's headwinds turned into tailwinds in 2025, and we're going into 2026 we're in 2026 stronger than we could ever be, stronger than anyone ever wished for Bitcoin to be in a stronger position than anyone ever thought Bitcoin would be in. And there's people going, I don't want, at this point, like I said, like you should, at this point, you should just be blind and make an allocation, because I don't understand this. I don't understand what's going on. Larry Fink, Michael Saylor, President Trump, whole of fucking, the US government, every government around the world. I'm just going to put in 5%. I'm just going to put in 10% and I'll figure it out later. That's really the attitude of someone who understands how markets work. Anyone sitting there going, oh, I need to learn more. I need to learn more before I get into Bitcoin is a fucking moron at this point.
And British, you talked openly about your missteps with MSTR, with some of these other Treasury companies. But with Bitcoin specifically, just looking back on your own journey, are there any missteps that stand out, or do you think you played that one quite well? Is there anything that you would have changed along that journey with Bitcoin specifically?
Fuck yes. I was sitting in a cigar lounge in 2016 or something like that with my best friend, and we're smoking cigars, looking at everyone piling into Bitcoin and all the price going nuts. And we just kind of bought like 10 coins each at that point, sitting in a cigar lounge, downloaded Coinbase, bought 10 coins each. And the next week when we were sitting there smoking cigars again, the price had doubled. And we're like, all right, well, we paid for cigars for a while. Let's cash out.
And sorry, this was 2020, you said?
No, this was like years 2016 or 17, something like that.
Oh, okay, gotcha.
And so I had it, and then I sold it, right? And I wished, and I sold it thinking this is a complete scam, and these people are going to get fucked. And I wish I had taken a little bit more time to kind of step out of my paradigm of thinking and understand it. I would certainly have way more Bitcoin than I do today. But from the moment that I got it, I've played it really well. I'm proud of myself for how I've played it, but I wish I'd got it a lot sooner.
Wonderful. And Bearish, if there's one final message you can leave, what would that be?
I don't know. Buy it if you want, I guess. What else can you say at this point? It's like, okay, so, we got all these people. By the way, do you know how lucky people are to be able to see education to the depth, to the professional, to the entertaining, to the nth degree of anything that's possible, to see this type of education on an asset with this much upside this early? Do you know how that's never happened before? Because when I was in real estate, I couldn't educate anyone on a deal until I tied that deal up under an NDA or whatever way. Because the moment I would tell anyone I'm working on this deal, suddenly everyone's trying to take that deal, right? Whereas with Bitcoin, there's so many good people that just want to educate people, right? Like I'm talking about everyone across the spectrum, and that's a beautiful thing. And it's one of the things that most people are going to miss, and because of the availability of the education, they're going to think it's not valuable, and they're going to miss out on the best trade of their life. And that's just how it works. It's unfortunate, but that's it. Like, it's a very beautiful thing that there's people trying to educate people on buying this asset, because the only differentiating factor between me buying Bitcoin and you buying Bitcoin is the price. Whereas with real estate, it's not like that, right? Because there's the deal, there's this building or that building, or, when's the next building going to come up? It takes time, all this other stuff. So, if you don't have an allocation to Bitcoin in 2026, you are a fucking idiot.
And how about more beyond Bitcoin, more broadly on life? I love some of the things you said earlier. One thing was around how you spend a lot of time really thinking about what you want to do, and then you go ahead and execute it. And in today's busy world, social media, all these distractions, it's not so easy for everyone to just set aside time for thinking, or maybe they don't even think that that's a thing they can do. Is there anything just more broadly in life, generally, in the times we're living in, economic uncertainty, AI, that you could leave us with?
Yeah, there's basically two trades, right? For the rest of my life, there's going to be two trades. There's going to be Bitcoin, and then there's going to be basically a replacement of the labor force type of trade, right? And that covers many, many different types of spectrums. And really, when you think about it, they're the same trade, which is the amount of money that needs to be printed to make both of those things happen. So, that's really what I spend my time thinking about. One of the goals that I kind of got pissed off last year with myself, and I just came to the conclusion that I was like, well, I have resources, and I have time. I'm in a very, very fortunate position. There is no fucking reason why I should be fat, right? So I was like, well, I'm going to work on that. I dropped 23 kilos last year, and my sole mission this year is to hit my health goal this year and accelerate and take all the lessons that I learned last year. And you know what it was? It was like you just kind of make these excuses, right? Like, I'm focused on money, I'm focused on this, I'm focused on that. And then I looked around at my friends that I really like admired, right? And I look at all of them, and they're all incredibly, richer than me. And the ones that I admired most are incredibly healthy, incredible shape, and incredible performance. And it's like, okay, well, clearly, I'm talking shit to myself. So it was like, okay, well, I need to figure this out. So that was my thing. And I think everyone should have that. I don't think anyone should be sitting here going, my sole purpose is watching Bitcoin's number go up. Right? The whole point of Bitcoin is that your energy gets protected so that you can actually focus on whatever you want to focus on. I don't think everyone should be sitting around thinking about Bitcoin's price chart and watching Bitcoin's price go up every single day. There's other things that, the world needs you to do things. And that's what you're here for. And the tool and the service that Bitcoin provides you is that it actually just makes protecting your energy really easy, right? You don't have to become a investment advisor or a manager or whatever to protect the value that you earn. But at the same time, you can hold Bitcoin, but you've got to actually provide value to the world, and you got to think how you're going to do that, and you got to live the best life that you can for yourself. So, think about that. I'm urging people what their goals are for 2026. Like I think it's amazing to me when I speak to a lot of Bitcoiners. None of my wealthy friends, none of their goals have anything to do with the amount of wealth that they have or want. That's just on autopilot at this point. It's happening. It's on autopilot. They might have a different project that they want to do. They might have, and it will result in money, but it's not about the money at this point. It's about, what else do I want to do? What else do I want to execute, et cetera, et cetera? How do I want to stay sharp? And in this world that we're going into, it's going to be increasingly volatile, increasingly, hard to figure out. You need to stay sharp. You need to stay on point. You need to educate yourself. You need to stay focused. Keep that brain rot away, and focus on what that singular goal is. Most people have too many goals, and then they end up doing nothing. So you need to focus on what your singular goal is. And like I said, for mine this year, I put it out on X. I put it on YouTube. Mine is very simple. It's December 2026. Somewhere around 80 kilos with a 12% body fat. Everything else is secondary, including Bitcoin. And I'll still obviously, do what I do when it comes to Bitcoin. But for me personally, I don't care if a single other person buys any amount of Bitcoin as a result of anything I say, because my singular focus is that. That is the ultimate priority. And everything else can take a backseat until that happens. But that's what I think people need. Most people don't have that. They don't have a singular focus. The world responds when you have a singular focus and an immovable energy. And that's really what people should have. And I don't think that should be, I'm going to sit here looking at TradingView until Bitcoin's number goes up.
Wonderful. So focus and health is wealth. Love that message. Thanks again for coming on the show, British. Great to have you on second time here, and hope we can do this again.
My pleasure.
All right. Take care.